Here at the Dukascopy TV Centre, we continue to bring you high-quality interviews. And today, we're joined by Fabrizio Quirighetti, Chief Economist at Banque Syz Co, who's here today to discuss Forex market movements. Welcome into the studio, Fabrizio.
Welcome, thank you.
If we begin by taking a look at the euro-US dollar in relation to the US economy, the non-farm rolls pay data showed an increase with unemployment dropping to 8.3%. The US equity markets rose to their fifth weekly gain last week. It seems that we're getting a lot of positive data out of the US. Do you think this can translate into a US dollar recovery?
Actually, we are bullish on the greenback. But the main reason why we are bullish on the greenback is not related to the positive surprise coming from the US economy. It's rather related to the weakness of the other economies and in particular of the Eurozone. You know that the Fed decided to keep rates very low for the next 2 years. And in that sense, even positive news are not moving much interest rate. And so you don't have any strong support from a positive economic news.
Do you think, therefore, it's a little bit too soon to say whether we could sort of predict a US recovery?
Exactly. I think it's still very early. You still have many risks surrounding not only the US economy, but also the world economy. And so for that reason, it's very early to say that we have a real recovery and that Fed will move interest rates higher in the very short term.
The euro has lost ground once again as Greece continues to resist setting austerity measures. It seems almost as if the world is waiting for Greece to make a decision, but it seems unlikely that even once it does, things are suddenly going to improve.
Exactly. The debt crisis will remain a big challenge for European countries over the next few months, and the result of that will be that the ECB should be forced at one point to step in doing a more aggressive quantitative easing. And that will push the euro down against the major currency and especially against the dollar.
If we move now onto the euro Swiss franc, and we can see that it is sort of very lightly touching the 120 floor. What is your opinion on BNS firstly setting this floor and also possible rumours that they could raise it over the next few months?
I think they won't move the floor above the current level. In that sense, it's quite a philosophical question. If they start removing or moving the floor every 3 months, they should decide what is the exact exchange rate and there will be no problem for them. So if we are in a free market, they could decide to put a floor, but then they should keep that floor at that level. And you see that even 120 seems a very difficult floor now because it's moving between 120 and 121. So you may ask what will happen if one day we go for a few minutes just below 120. And so I don't think they will take the risk of losing their credibility by raising the floor, so it will be a more difficult target to achieve and losing perhaps the credibility if they cannot defend 1.25 or 1.30. In any case, if the Swiss franc goes up against the euro, if the exchange rate goes to 1.30, 1.35, the BNS will not be sad about this outcome. So I think that you still have a risk of not seeing this 120 resisting for long, especially if you have a problem with the Eurozone.
We mentioned here BNS, we've already mentioned the ECB and the Feds. What's your opinion on central bank involvement or interference, as some people consider it?
I think if you look the major currency, especially euro, the cable, the greenback, you see that the quantitative easing has always led to a depreciation of the currency. The first one to commit quantitative easing was the Bank of England, very late 08, beginning 09, very aggressive one, and the sterling lost ground against the dollar or the euro. Then the US and the Fed did 2 quantitative easing, and the dollar was quite weak over the last 2 years. And now it's time for the ECB to step in and to save the Eurozone. They have started by putting the refinancing operation, by buying some South of Europe debt, and you have seen that the euro has started to weaken over the last 3 to 4 months.
You mentioned there the Bank of England, and they're possibly moving again once more towards quantitative easing. What will that mean for the cable, do you think?
Yeah, this week they will probably decide to increase the quantitative easing by further 50 billion sterling. That will put some downward pressure on the cable, but most of the downward movement now is behind us. So in that sense, it will be more a drag on any strength of the cable. So it will keep the cable down, but it won't push it really down.
The IMF has said that a worsening debt crisis in Europe could cut China's growth in half. Converse to that, the Japanese yen seems to be behaving relatively consistently. What are your predictions in this sense?
Yeah, it's still very difficult to have a prediction on the yen. I think most of the macro managers have lost a lot of money betting against the strength of the yen. I think that they could decide to implement something like the Swiss by deciding a floor, but for them it will be even more difficult than for the Swiss National Bank to keep that level, because the transactions in yen are much more important than in the Swiss franc. But I think that also you have to look for the yen, the current account balance, which is still in surplus, and for that reason, that is a key reason why the yen has been strong over the last few years. It's because they don't have a deficit against the other economies. They have a surplus, so they are net creditors. And for that reason, the yen is still very strong. And that explains why the dollar was weak over the last 10 years. And that's the reason also why the euro should start to weaken, because the current account was in balance during the last 10 years, and now it started to be in deficit. So the euro should be a weaker currency compared to the last 10 years.
Now, what about the Australian dollar? We can see here that it experienced a jump as RBA went against analyst predictions and maintained interest rates at 4.25%. With all eyes on the euro, the Australian dollar appears to sit quite quietly almost. What role do you think it will play in 2012?
I think that the Australian dollar is the most overvalued currency over the world, and it has many problems, and so it doesn't deserve this kind of strength. So I will recommend to short the Australian dollar, at least with a put option, because it's one of the best hedge against an economic or a financial accident in the world over the next 12 months. The key reason why I think Australian dollar is overvalued is because it's all linked with Chinese growth. And so if you have a problem in Europe, it will hurt China, and so it will hurt Australian dollars. You have the biggest bubble in the housing sector is in Australia. And so for this reason, the Australian dollar is a good hedge to protect in any portfolio, in any balanced portfolio, to play that rather than to short equities or bonds.
The New Zealand dollar is the best performing currency against the US dollar, but with New Zealand exposure to European debt pretty high, and also coupled with a seasonality trend of moving high in the early days of February to then drop low again, what can we expect from the New Zealand dollar?
I think it's about the same story than for Australian dollars, because New Zealand economy is very linked to Australia, and so it means it's also linked in some way to China. Top of that, as you said, New Zealand has a lot of exposure to European government debt, and so for this reason I will be quite negative on the prospect about the New Zealand dollar over the next few months.
Fabrizio, thank you very much. That's all we've got time for here today from the Dukascopy TV Centre. However, do stay tuned for all of your latest analysis and interviews. For now though, goodbye.